So I just wanted to make this bigger so that you guys can see. So essentially what we did is we took the earnings for this week. So we see a very big company. We started from Ford, then we had PayPal, Google, Reddit, Snapchat, Meta, Microsoft, all of those. It's about 24, 25 companies. And then we went and looked at our swing trading model from Friday. So we took the data from Friday, the 25th of October, and we looked at, and then we're going to show you what the data looks like. We looked if the swing model was bearish or bullish for that day. And we wanted to kind of do the preparation over the weekend. So on Friday, we took the levels and we put also the date here of the earnings date. We put here the date of the earnings date, and then we took the opening price for Monday, the 28th, and we did different strategies. But before we do that, let's go back into our bot and let's see how we actually took the data. So we went into the bot and we went all the way back to Friday, and we took our 5 days and our 20 days model, and we started from Ford, for example, and then we looked at the data back from the 25th. So if you go here, and then what we do is we saw that obviously the upper band means that we have a bearish kind of like bias. We took this price and we added into our backtesting sheet right here. And then we kind of looked at different strategies. So the first strategy is very simple. So let's look at the bias and let's trade at the open of 1028. So if we prepare on Friday, in this case, we go short because we have a bearish bias, and we go long when we have a bullish bias. So we trade at the open price. This is the open price from Monday. And then we took, this is the open price from Monday. And then we looked at the strategy using different scenarios. The first scenario is closing the position at the open price of the stock after the earnings event. So in the case of Ford, this would have been on 1029. In the case of, in this case, Google, this would have been on 1030. So we took the opening price, and the second strategy would be to close at the close price after the earnings. So in the case of Ford, instead of trading at the 9:30 on the next day, we close at 4 p.m. Then we look at the return. So the first thing we want to see is the one-day return if we were to close strategy one at the open. Here you see, obviously, we have a 5% return on Ford, we have a 27% on Reddit, and so on. So we have some negative returns right here. And then we have the one-day return if we were to close the position at the close price. So looking at the close price after the earnings. So here we have our data. For example, you see here on Reddit, the price closed at 41% on that day. And then simply we do the calculation. And what we assume is that it's an even portfolio, so we do a $5,000 trade for every position, for every stock in this case, and this will show you the profit and loss for every position. So if we go back, the first column is at the open price, and the second column is at the close price. So if we were to trade from the Monday open to the open price after the earnings, our profit and loss would have been for those 24 positions, $27, with a win rate of 45%. And a total portfolio return of 2% for the week. If we go in and choose the second strategy, which is closing using the close price after the earnings, the profit is in dollar value very similar. Our portfolio return is 2.14%, but our win rate is 54% right here. Then we did another exercise and we took the price from this morning. So this is the open price from this morning on those companies. And we look at what if we keep the position instead of closing the day after and keeping it only for 1 day, closing at the end of the week using the open price of today, which is November 11th.